your roadmap to the latest in auto. Welcome to Highway Herald. Recent studies indicate a major shift in the automotive scene. EV sales are slowing, and buyer interest is fading. J.D. Power reports that only 24% of shoppers are now considering an EV, a sharp drop from last year. The EV market is undergoing a transformation, with dwindling interest. Let's explore the 9 key reasons behind this trend. Reason number 9. EV battery lifespan issues. Battery degradation is a major concern for potential EV buyers. Studies show that the average electric vehicle loses about 20% of its range after 5 years, deterring long-term ownership. Extreme temperatures and high-speed driving accelerate this wear and tear. A 2024 ICCT report highlights the high cost of battery replacements, often in the tens of thousands of dollars, overshadowing initial fuel savings. This cost, along with the environmental impact of producing and disposing of batteries, raises sustainability questions. Battery degradation also lowers the resale value of EVs more than internal combustion engine vehicles. Until significant battery technology breakthroughs occur, concerns about degradation will hinder widespread EV adoption, contributing to the waning interest in electric vehicles. Reason number 8. Hybrids offer better value. One major factor contributing to the waning interest in EVs is the rising appeal of hybrid vehicles. For environmentally conscious buyers, hybrids offer a guilt-free driving experience by polluting less than gas-only vehicles. Moreover, hybrids are often more accessible and cheaper than their gas-only counterparts. Classic hybrids, excluding plug-in variants, are among the most reliable vehicles on the market today. With their proven track record, it's no surprise that hybrid sales have surged. They grew 64% last year and continued to rise with a 70% year-over-year growth in the first quarter of this year. Hybrid vehicles now account for 9% of the US market, and this trend shows no signs of slowing down. Meanwhile, EV sales are regressing, with a 15% drop in the first quarter compared to the previous quarter. Reason number 7. High running costs. Contrary to popular belief, EVs are often more expensive to run than ICE cars. While charging at home is cheaper, most EV owners still rely heavily on public chargers, which are not only expensive but can also cost more than gasoline. The initial purchase price is just the beginning. Insurance premiums for EVs are significantly higher, and repairs, especially following accidents, can be costly due to specialized components and a lack of trained personnel. Additionally, high interest rates and inflation contribute to the overall cost burden. With fuel prices decreasing, many consumers see little practical reason to switch from their reliable gas-only vehicles. Reason number 6. Questionable reliability of EVs. When EVs first emerged, experts touted their reliability, pointing out that electric cars have fewer parts than internal combustion cars. However, real-world experience has shown that EVs are not as reliable as once thought. According to a recent Consumer Reports study, EVs cause 80% of the reported problems compared to gas-powered cars. The issues primarily stem from high-tech systems. Integration of the battery with the rest of the vehicle and software problems are common complaints. Even infotainment systems are more problematic, and build quality often suffers due to cost-cutting measures during production. These reliability concerns are a significant deterrent for potential buyers. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now let's explore reason number 5. EVs as secondary cars. EVs are primarily seen as secondary vehicles. A J.D. Power survey reveals that 68% of shoppers considering an additional vehicle would look at an EV. However, interest drops to 47% among those seeking a primary vehicle, indicating limited appeal for new technologies. The early growth of EVs was driven by affluent households eager for innovation. Yet this market segment is saturated, and EV makers struggle to meet middle-class needs. The Boston Consulting Group reports demand for a sub-$50,000 EV with over 300 miles of range and quick recharge times. Currently, only one EV fits these criteria. Reason number 4. Persistent range anxiety. Before electric cars, range anxiety didn't exist. Now, it affects nearly every EV owner, regardless of range. For potential buyers, this anxiety is even more significant. A J.D. Power survey shows range and charging concerns are highest among those with longer commutes. Only 24% of those commuting 46 to 60 minutes daily are likely to consider an EV, a 13% drop from last year. Most accessible EVs can't cover more than 300 miles on a single charge, and real-world conditions often reduce this range. Cold weather, high-speed driving, off-roading, towing, and other demanding uses dramatically shorten an EV's range, making them less practical for many potential buyers. Electric cars still can't meet the needs of most drivers. Reason number 3, inadequate charging infrastructure. The skepticism towards electric cars is rising, with many shoppers citing charging infrastructure as a primary concern. Among those unlikely to consider an EV, 52% point to charging issues, a 3% increase from last year, highlighting growing concerns. Clean Technica reports that 70% of those who switch back to ICE cars do so due to charging infrastructure problems. Even in well-developed areas like California, EV owners face a lack of reliable fast chargers. Studies show that 1 in 5 charging attempts in the San Francisco Bay Area failed last year. Imagine how much worse it is in less developed regions, where EV owners must travel long distances to find a public charger. While home charging is an option, many US citizens live in apartments or lack a garage, making it impractical. Reason number 2, high purchase price. Despite recent discounts, EVs remain pricey compared to conventional cars. Last year, EVs averaged nearly $53,000, while gas-powered cars were around $42,000. This price gap, though narrowing, still deters many, especially younger buyers. Gen Z and Gen Y were expected to lead EV adoption, but interest is waning. Only 24% of Gen Z and 33% of Gen Y shoppers are very likely to consider an EV, a drop of 2% and 5% respectively from last year. Even environmentally conscious younger generations hesitate due to high costs. They seek affordable options, but the market falls short. The Nissan Leaf, soon ending production, is the only sub-$30,000 EV, with few options in the $30,000 to $40,000 range. Most EVs are more expensive, limiting their appeal. Reason number 1, limited selection of models. Limited model variety is a key issue dampening EV interest. As of 2024, the market leans heavily towards luxury or compact cars, leaving gaps in vehicle options. This shortfall means many potential buyers struggle to find an EV that suits their needs. For families seeking spacious, affordable electric SUVs, choices are scant. Models like the Tesla Model Y and Ford Mustang Mach-E are premium priced, while more budget-friendly options lack adequate space. This gap drives consumers towards traditional ICE vehicles or hybrids, which offer greater diversity. Moreover, the EV market lacks trucks and minivans. Though announcements like the Tesla Cybertruck and Rivian R1T create excitement, they remain either unavailable or too costly. Regional availability issues and inventory shortages exacerbate the situation. Manufacturers must expand their lineup to appeal to a broader audience, as the lack of EV model variety contributes to market stagnation and preference for traditional vehicles. Thanks for watching, and don't forget to subscribe to Highway Herald for your roadmap to the latest in auto. Stay tuned for more vehicle updates and upcoming videos.